Hey guys, I've been working on a trading plan for a while and it has been working quite well for me, so I would like to share that today. And today I'm going to try to wrap it under 10 minutes. 15 minutes would be the max, so I'm going to talk quite fast, and if you don't get a point, just kind of pause and go back if you need to. Okay, so let me outline the trading plan real quick. Okay, so the trading plan is consisting of waiting patiently on the sell side, counting the dips, right? And this plan will allow us to get into the trade at the best price possible, right? So let's just take a look real quick. But before that, we need to determine the potential of the stock, right? Know where to find our resistance and our support. Know when the buyers are coming in to buy, and conquer some of the failures as a trader. Let me touch on that real quick. One of the many fails of a trader is the failure to have a plan and trade that plan, right? Having no plan as a trader is a fail. And failure to understand the potential on the upside and downside is a fail. Right? Failure to act before a breakout is a fail. So let me just go back and find the potential of this stock real quick, right? We're trading GP, Green Power Motor. I'm going to talk real fast, and I feel like I'm going to run out of time, so just kind of pause if you need to and go back if you need to. Okay, before the main exchange debuted, they were trading around $1 to $5 over the counter, right? And when they went to the main exchange, they went from $7, right, all the way up to $29 and back down. So the potential of going up and down is great, right? And I love to capture some of this potential here, and this trading plan will allow us to do that. Okay, and over here we saw some kind of action going on a continuation chart pattern, which meant that people are trading higher over a long period of time, which is 7 or 10 days or something like that, right? So I told myself, while the price is still cheap, why not just get in before the potential of a breakout happens, right? So I actually failed to understand that, right? Having no plan at the time. Over here, I just know that it was cheap to get in for a breakout, right? But no plan is no good, right? So I missed out all of this potential here, right? Even when on the first day, I was thinking to myself, $13 compared to $9. I want to be waiting for a consolidation where people are selling, taking profit over here, right? So that I could get in a little cheaper, waiting for a cheaper. Well, I'm a cheapskate, by the way, and that doesn't work out well for me sometimes, right? So it went up to $17 at this point. I was like, no way, Jose, right? So who knows how many times, God knows how many times I got in when it's high, betting on it to go higher, only to be, to meet a sell-off, only to stumble upon a sell-off and lose money that way, right? So this is the plan here. We're going to start at the very top. We're going to start counting the days that it dips, right? So we want to be active, and we want to be active on the second day, not always on the first day, because when there is a sell-off, there's potentially it usually goes on for a couple of days at the minimum, right? Even on the upside too, they'll go on a couple of momentum buying up for a couple of days, right? So we want to be active on the second day, third day, fourth day, or fifth day, right? So let's take a look here. First day, we could trade as a day trader, get in here because the price sort of kind of justifies how we act, right? Because the price was great enough. People are buying in here. The short sellers are coming in to buy, to short, cover the positions. That's how they make the money, right? We could day trade out here, and we can swing in the morning, 6 o'clock in the morning, and sell it before it sells off right here, right? Or we can hold our position if we can stomach this loss here for a higher price on that following day, right? But I usually don't do that. I only swing for 1 to 2 days at the maximum. The only way I could hold out for the second day is that there is a greater pressure of buying and people are betting on a higher than the previous day's high. I could hold out, and there's no way I'm going to hold out for 2 more days, more than 2 or 3 days, right? Not even a week. Okay, so that's how I trade, and I find my entry point I want to show you how I found my resistance and my support level and my way of entering, right? Finding an entry. So we can start again on this top here, 1, 2. That's a great drop here. We could find an entry over here, right? And day trade it out. But this trade sort of kind of weak. Luckily, it held out in the morning, right? But as soon as the market opens, trade down, right? On the third day, no action at all because it was slow and low on that day, right? On the fourth day, we saw some kind of action here, and it was a great day to be trading, but I missed out on this day. I think you know, one moment you take your eyes away from a trade, and if your account were occupied and you were in position with another with another stock, you might not be wanting to let that go yet, and you have no plan on that day. I think I missed out on this trade for some reason. I found out the support is 1650, because as soon as it hit 1650, everybody was jumping in, buying, and the buying pressure went all the way to 12 o'clock, right? And it came down, consolidate a little bit. If we were to draw a line along the first dip, the first breakout to the very top of the VWAP line on that day, it would have been somewhere around there, right? We need to find our entry with the Fibonacci ratio, right? We would enter on the next low, which is 65% right there, right? And as long as that momentum keeps going up and higher on the high, on the first peak, and that's fine. But we don't want to see them going down towards the 23 or below 50%, okay? That's a potential of another sell-off below our entry point. Okay, so I'm gonna if we missed out on that, that's fine. We gotta start over again, right? On the next day, it did not go any higher because people it did not breach, right? 2050, right? It did not breach the previous day's high, right? So people had start selling. We're gonna start over again and see if this this stock falls into our plan, and so we could trade it, right? We missed on that already. Start again. 1 day down, 2 days down, 3 days down, and we saw some action on the third day already. And on the fourth day, same thing as we counted down on the 4 days right there. So that's an indication of a great trade. I did not trade on the third day because even if I look at all this trade right here, right, all this trading, it wasn't as strong enough, right, for me to commit, even though it was trading on the upside, right? And even if we draw the Fibonacci on the top of the breakout right there, it wasn't a big breakout, right, from 17 to 19, and it already came down towards the 50% right there, right? If we were to draw a line and try to enter on the 50%, we would have been running on a risk of catching a sell-off later on. See that? Breaching down 23%. We want to get out, right? We want to get out. Depends on what your risk tolerance is. You can probably hold on to it because it has been 3 days, 5 days already, right? On the fourth day, it came down even lower than that, right? Even lower than that. It came down to our true support level of $16.50 to $17, and this is what I saw on the fourth day on a 1 day chart. I'm going to show you real quick. On a 1 day chart, this is what happens, right? So when you click on a 5-minute chart, it will show you, it will usually give you a notification, even on the 1 day 1 minute chart there, give you a notification of low, right? And before that, there was this great sell-off there. There was a complete reversal, even higher than the sell-off, right? With a green candle there, and that tells us that there's a great buying pressure here when it reached down to our true resistance level right there, right? I mean, not a resistance, but the support level of pricing was 16.5, determined by the support level is determined by when people are getting in. And when the stock bounces, getting in and buy it, right? So a lot of pressure there, right? We could draw a Fibonacci ratio. Let me go back here so I can draw that right off the bat there, and trying to find our 50% entry point along this line of the dip right there, right? And but that's usually not how I do it. My way. That would have been an okay trade for that day because it's been 5 days already, right? So potentially, if it goes lower, it's not going to be much lower. Okay, so I start drawing a line on the dip there, right? Dip of the day along the next dip, the second and third dip. If the dips falls within the 25 degrees or less of an angle, on an incline angle, by the way, we are trading up, and we want to be entering on the second or the third dip, right? Trying to get in as low as possible, but on a upside trade, right? If this second or third dip were to dip below this first dip here, then we don't want to be entering there. We want to find out where the lowest one is, and when the next one that's on an incline, right? Trading up, right? Basically, that became our resistance, and even if we to draw the next, several dips after that, it never got dipped, back below the low of the day. So we are confident with what presented here on the 1 day chart here. People are buying in, and there are a lot of volume that day. We got to be watchful for that stuff. So we can, if we miss that, we can enter here, or even draw Fibonacci when it reached the top of VWAP line right there, right? And try to enter one last time before the breakout happens. This is just the beginning of the breakout, right? We can enter along the lines of right there. Let me see. This would have been the top, right? I'm sorry. It's hard to see. It's very hard to see on a 5-minute chart. Let me see if I can show it to you on the 1 minute chart on what the breakout looks like. Okay, on the 1 minute chart, yeah, there is a right there. There's a first peak. We want to draw a Fibonacci ratio right there, right? Likely before it reaches the top of the VWAP line, right? So the 50% would have been a good entry right here, and that's okay, right? Because we are capping a great breakout on this day, right? And that's what I did. Okay, so let me recap real quick on what I did. Okay, the plan is to actively watch a stock and know the potential of the stock, right? And count the days that it drops. If you miss out on the upside momentum, that's fine. You're going to start here. You start counting down and want to be active. You want to be active on the second day, third day, fourth day, or fifth day, even the sixth day, right? Almost never on the first day, right? Depending on how much it drops. So if the first day would have had dropped right there, right, to our first starting point right there, right? Man, it would have been a great trade if we could enter a drop like that. But we got to be watchful for the news also. How come does it drop just like that? Whether there's a bad news on that day or not, or is the company going bankrupt? Now, on that day, on the fourth day that I traded, it actually there were actually some bad news on that day, right? The 8th right there. Okay, let me show you real quick. White Diamond Research published report the title of Jake is up, right? Wind power motor electric vehicle are not made in America, but made in China. Price target is $1.50. And how come there's only one bad news and people are still buying, right? They were just trading the price action, right? Because the short sellers need to get in here, right, to buy up, right, to cover the position, and that pulls every other kinds of buyers along. So we want to be in the trade before the breakout happens. And how did I find the entry point? By drawing a line along the dips, right? If the next dip doesn't dip below the lowest one, we can find our entry ideally between the low VWAP and the middle of VWAP, right? And another indication of breakout is when the line crosses, right? The 21 and 8A crosses, and there's a lot of MACD rolling up with the slope right there where they cross. That's where people are betting on the upside, right? We want to get in before the breakout happens. And that's how I did it. I gained all of this on that